The average American is paying for 32 subscriptions. They can name 9. That gap, 23 services quietly billing every month for things that stopped being used somewhere between the free trial and right now, is not a budgeting failure. It is not a discipline failure. It is the predictable outcome of an economy that was deliberately engineered to extract money in amounts small enough to feel harmless and large enough to matter when you add them up. The real reason you're always closer to broke than your income suggests you should be is not what you spend consciously, it's what you spend on autopilot. And autopilot, it turns out, is very expensive. Here's what they don't tell you about saving $10,000 fast. The fastest path there is not cutting lattes. It is not meal prepping. It is not a budget spreadsheet. It is a single focused audit of every automated payment leaving your account. Run once, acted on immediately. Most people have done a version of this. Most people did it halfway, felt productive, and stopped before they hit the part where it gets uncomfortable. Because the comfortable version of the audit finds the forgotten meditation app and the duplicate streaming service. The uncomfortable version finds the gym membership, the software tool from a business idea that didn't happen, and the premium tier of something the free version would have handled fine. The comfortable version saves $40 a month. The uncomfortable version is where the $10,000 comes from. Before the mechanics, the villain in this story is worth naming clearly, because it is not you. The subscription and convenience economy was architected around a specific psychological reality. Humans are terrible at tracking small recurring costs. A one-time purchase of $200 registers as a loss. The same $200 billed at $16.99 a month registers as almost nothing, until someone does the math in year 3 and realizes they spent $600 on software they stopped opening in month 2. This is not accidental. The shift from one-time purchases to recurring billing happened because recurring billing dramatically increases lifetime customer value while dramatically decreasing the moment of conscious decision. Every subsequent charge happens without a decision. That is the design. The economy did not do this to be malicious. It did it because it works. Understanding that removes the self-blame from the equation, which matters, because self-blame is the thing that makes people close the bank app before they finish the audit. The $10,000 framework has 3 phases. They run in sequence. None of them are optional. Phase 1 is the bleed audit. Pull every recurring transaction from the last 90 days. Not your memory of them, the actual statement. Every subscription, every annual renewal that hit in that window, every convenience charge, every free service that stopped being free. Categorize them into 3 columns. Use it regularly. Use it occasionally. Haven't touched it in over 60 days. Everything in column 3 is canceled today, not tomorrow. Today, because the psychological window for cancellation closes fast, and the next billing cycle does not wait. The average person running this audit for the first time finds between $80 and $200 monthly in column 3 alone. That is $1,000 to $2,400 annually. From one afternoon. Phase 2 is the rate audit. This is the one people skip. The bleed audit finds forgotten spending. The rate audit finds accepted spending that should have been renegotiated years ago. Car insurance, internet service, phone plan, renters or homeowners insurance. These are not fixed costs. They feel fixed because most people set them up once and never call back. But the documented reality, confirmed repeatedly across consumer finance research, is that existing customers consistently pay more than new customers for identical service. The loyalty penalty is real, it is intentional, and it is reversible with a single phone call. The average household saves between $200 and $600 annually per renegotiated service. Most households have 3 to 5 renegotiable services sitting untouched. That is another $600 to $3,000 from phone calls that take less than 20 minutes each. You are probably doing the math right now. Good. Keep going. Because phase 3 is where the $10,000 actually becomes possible inside a single year, rather than a vague intention. Phase 3 is the income audit, not a side hustle lecture, something more specific and more immediately actionable than that. Most employed people have untapped income sitting inside their existing situation that they have never claimed, unused paid time off that converts to cash at separation, and can sometimes be cashed out annually depending on employer policy, benefits reimbursements that expire unused every December, wellness stipends, professional development budgets, commuter benefits, HSA contributions the employer matches that the employee never maximized, tax withholding set to a level that generates a large refund each spring, which feels like a windfall but is an interest-free loan to the government that could have been earning returns since January. None of these require a second job. They require one afternoon of reading the benefits documentation most people received at onboarding and never opened again. Here is what you save this video for. The single thing that separates people who reach $10,000 from people who get $400 into the process and stall. It is not motivation, it is automation, deployed in the right direction. The same infrastructure that drains money on autopilot can be reversed. An automated transfer to a high-yield savings account, triggered the day after payday, sized at whatever the bleed audit recovered, does not require discipline to maintain. It requires one setup. After that, it runs exactly like the subscriptions you just canceled, silently, continuously, without requiring a decision every month. The people who successfully save $10,000 fast almost never describe willpower as the mechanism. They describe a system they stopped being able to interfere with. That is the thing worth building. This channel does not dress financial mechanics up in lifestyle content to make them easier to sell. The math is the content. If that's the version of personal finance you want, the one that tells you what is actually happening to your money rather than what to feel about it, subscribing costs nothing, and the next video goes somewhere. Most finance content is too nervous to go. Share this with whoever in your life is convinced they don't make enough to save. Not because they need motivation, because they have probably never run the bleed audit. And the gap between what they think they spend and what is actually leaving their account is almost certainly larger than they believe. The uncomfortable parallel to close on. Every system you built to save money operates on exactly the same psychological architecture as every system that was draining it. Automatic, invisible, continuous. The difference is direction. The question worth sitting with, and worth writing in the comments, is this. When you ran your last spending audit, how far did you get before you stopped? Not why you stopped. How far? Because the answer to that question maps almost exactly onto the distance between where you are financially and where you want to be. The next video on this channel addresses the question this one can't fully answer. Once the 10,000 exists, what is the single highest leverage thing to do with it first? And why the obvious answer is probably wrong.